Hi there, everyone. My name is Mark Gardner, MPC Markets morning call. Today, the 29th of May, last day of the month in terms of trading days. Look, yet again, more record highs. We got a legitimate 60-day extension as long as Trump signs off on it to the ceasefire. Not just one of those ones that's just been announced that's complete crap. So yeah, but we essentially saw the market head higher. Your usual suspects. You got like the likes of say Oracle, Palantir, and some of the software companies in the middle there, next to sort of Meta and Google on the market map, headed a little bit higher. You've also got obviously Nvidia, AMD, Broadcom. Micron took a bit of a breather, but just bear in mind that down 0.5% on a week that it's up 25.5%. It's probably not the worst result. And things like Qualcomm, etc., doing pretty well. We had we had Dell up 19% after market. AI server sales absolutely crushed forecast estimates. I listened to a Bloomberg interview after with the CEO of Dell, and while the CEO was really pressed on on whether this was just a one-off customer that wasn't defined, because they're starting to get some defense contracts apparently. It actually turns out it's a broad-based demand, so which is even better. And he did the journalist did ask the question about 700 times, and didn't seem to believe him very much. Synopsys was down 9%, HP was down 2%. So there's probably it wasn't just a full sector-wide rally. Dell really, setting themselves apart. They're up like 153% this year, and their revenues nearly doubled. And we also had Anthropic finishing a 65 bill raising at a 965 billion valuation. So that's eclipsed OpenAI's recent raise at 852 billion. Google was in for several billion. Amazon's in for 5 billion. Their Q2 revenue was expected to be at 11 mil, doubling quarter on quarter. So this is a company where they said 10 billion, I think it was December, 10 billion was going to be their annual run rate. That is now at 50 billion. So we're only at the end of May here. We're 5 months through the year. They've like their own internal numbers and prediction have gone from 10 bill for the year to 50 bill expected for the year. IPO is expected as soon as the fall of 2026, which will be American fall, obviously American autumn. So that'll be sort of, I guess, late Q3, early Q4. So towards the end of this year. But there was but very surprisingly as well, Dollar Tree, Agilent, and Best Buy. So some of the discount consumer stocks actually were up significantly, actually, like mid to high teens on strong consumer earnings or strong earnings prints. So excuse me. Which is kind of a little bit at odds to what the consumer sentiment numbers are. Whether it's just that it's lagging or not is a different matter altogether. Obviously, the ceasefire very much helped. Oil hit a 6-week low. Look, despite the fact that I think this is already priced in personally that there's going to be a deal. It's only a ceasefire deal for another 60 days. All it does is kick the can down the road. Oil's still at $88-90. And it was really interesting to see some analysts sort of say, well, the new norm is 70 and above, no matter what happens, because the threat of Iran just being able to, close that strait, which up until Trump's, probably not particularly well thought out move, has now just handed Iran a tool to basically disrupt the global economy. So he's going to end up, this deal's probably just going to end up going back to the way things were. But now, unfortunately, we've got the added problem of Iran now knows it can just cause everyone an issue. So not very well played. And look, as far as ceasefire goes, so we had 5 drones intercepted near Hormuz Strait, heading towards tankers. We had a ballistic missile fired. Israel stepped up attacks on Lebanon, killing 14. And Iran also fired warning shots at 4 commercial ships passing without permission. So, ceasefire, I don't think is probably the necessarily the correct word for it. More of a, fire less, I suppose. And look, Aussie market, we really got hit yesterday because there was some increasing attacks, essentially. So we bounced back, I think, in the SPY overnight, a good sort of 50 or 60 points. I would expect that, that's probably unders. I reckon it probably should be up nearly double that, I would have thought, today at some stage. We've been really beaten down. The technicals aren't helping, obviously. We're one of the only markets in the world that's not got strong buys on all the technicals. But that, that's the ASX, unfortunately. So yeah, we can clutch defeat from the jaws of victory in terms of a bull market rally. But look, when we closed yesterday, there was genuine concerns. Oil was up 2 or 3%. Oil's now ended up finishing down. Where is it here? Down 1.2%. So that's a 4% odd pullback. So realistically, we will probably see the local market benefit from that over the course of the day. We did have inflation numbers overnight and GDP numbers. So annual change in personal consumption and expenditures index, which is, I'm sick of saying this all the time, it's the Fed's preferred inflation number. They don't tend to watch CPI and PPI as much as this one. So it was up 3.3% year on year, the highest since November 2023. And that was the core, sorry. The headline was up 3.8. So that's also the highest since May 2023. That was a pretty bad inflation period. So, despite the fact that, the market ignored it because the analysts were expecting higher than this, it still doesn't change the fact that they're in the threes. And we did have Lisa Cook talk about rate hikes potentially being the next move, from the Fed. She's the one that Trump tried to fire and is then taken to the Supreme Court. Now he can't fire her. So she's probably a little bit emboldened to say things that are really going to piss Trump off. So I wouldn't necessarily take too much notice of that. It's a bit of a loose comment from a central bank member. But yeah, look, there's the instant view overall, rising inflation, possibly slowing growth and diminishing consumer sentiment. It possibly does not bode well for the future. Treasuries didn't do a hell of a lot, and we've got just a little bit of corporate news. And just quickly back to this, copper actually got to, which has been on fire, got to a fresh 2-week high. That should be pretty good for our big miners, I would imagine. Although BHP is in the news, they've got, basically there's leaked documents showing that it bought 62 diesel trucks while claiming the EV transition progress. And they're already in the press, and you've got Fortescue firing shots at them through a bit of a guerrilla marketing campaign because they've transitioned and they've done the right thing, and they're very much taking aim at the other big miners that are still using diesel, under the guise of putting some little Aussie battler on the thing, going, I can't get medical care, but these guys get a diesel subsidy. Pretty clever marketing campaign, I've got to say, very sneaky. So Webjet CEO Katrina Barry exits Sunday. CFO Leighton Shanos is going to step in. IAG settled a bulk lawsuit, and a consortium's looking to buy tourism holdings. And yeah, look, there was a little bit of news around on Bloomberg around Guzmani and their exit from the US, and a track record of Australian businesses not necessarily being great at moving opening up in the US. So you can catch the detail of that in the more broader morning call, which is a proper PDF where you can read in more detail about the things we're talking about in this podcast. Next week, what do we got? So we've got Palo Alto. That'll be pretty closely watched for us. Our Software Survivors campaign, we had CrowdStrike and Palo Alto as a pair. We recently trimmed because we had a 5 times leveraged pair in that. And those two stocks are the first. Well, that subsector is the first to really rally out of the SaaS apocalypse, up 65% since early March, and they just keep powering. So yeah, then and a lot of them have actually gone. A lot of them are actually now doing deals with Anthropic, et cetera, et cetera. So yeah, look, overall we've got. Australian GDP next Wednesday, building approvals early, not much to really talk about. The big dog next Friday night, non-farm payrolls. So we had a miss last time. It'll be interesting to see how that pans out. But look, I mean, earnings season very much in the rear view mirror now. I mean, the Palo Alto, Broadcom, and CrowdStrike will be interesting. Don't get me wrong, but we're well through that now overall. So if you want to listen to Bulls versus Bears, our weekly podcast, we do a little bit more of a detailed focus, a little bit longer than this one, obviously. Every week, myself, Jonathan Takadina, Kai Chen, occasionally young Finn Judell joins us as well. And essentially, we're gonna focus today on the mindless green robot, or is what we call it, but passive investing and the inflows, etc., into the market, and how that affects certain stocks. And obviously, he's had a massive. Now that the passive flows are so enormous, how it really does form a really solid underlying bid and makes these markets rally or hold in there, a bit better than they used to overall. Probably responsible for CBA going to $200 last year, and probably responsible for BHP being so resilient in the last in the last few months. So really interesting topic, and you really do need to, it's something that you probably do need to understand in this modern age of investing, is because there is so much money going into those passive flows, directed by government, people just not bothering to do stocks, particularly here in Australia. They're just shoving money into ETFs. It's a massive growth market. And mainly because most fund managers are crap. 82% of them don't beat their index, which they set themselves. So you can understand that, but but what you want to understand if you're stock picking is the underlying effect that passive bid brings to some of the indices. So if you don't watch that, guys, have a great weekend. We'll obviously speak on Monday. But look, if you're finding this useful in the mornings, please subscribe on Spotify, YouTube, or Apple Podcasts. It very much helps us out. Just go to @MPC Markets is the handle on all of those platforms. But thanks for listening, and we will speak again Monday.